Good morning. Good morning to everyone on Halloween morning. It is Thursday, October 31st, and it is right at the open. The stock market is opening at this moment, and I wanted to take a look at that as well as we have a lot of earnings reports that have come out and a lot of interesting ones that I wanted to take a look at. Um, and we're going to take a look at probably about six different earnings reports, and I'll try to get through those in the next hour. I also want to look at some economic news that I think is worth mentioning because I think it's going to cause the Federal Reserve to cut interest rates in the month of November. And I'll share with you why I'm expecting that. Not a big giant surprise, right? I think people are expecting that. But I see some data that probably is going to compel the Federal Reserve to move on interest rates and lower them so that we don't have an economy that crashes down. They want a soft landing. They don't want a lot of job losses and so forth. So let's take a look at the markets and see where they're at. And then we'll get into economic data and look at some earnings reports. And please suggest if there's a topic or a stock you'd like to take a look at, please suggest it in the chat and I'll see if I have time to go over it. So let's get into it. So, and good morning, Tomas. Buenos dias. I wanted to take a look at Asia. So, one report that came out of China is that they are seeing their manufacturing activity rise. And that's very good news. That's very good news that their economy is beginning to grow. If you look at that one data point, right, it's not enough to say, hey, they're on to really prosperous times, but they are trying to grow their economy, and they had one good report, and it looks like the market in Shanghai is moving up, so that's good. We'll see if Chinese stocks move today as well. A big mover this week and really over the last couple of weeks has been Coinbase because Bitcoin has been moving. Holy smokes. And when you look at crypto, and I'm going to drill into Bitcoin a little bit. If you look at the past month, it's up over 11%. It's a very good move over the course of a month. And the way that it's moved, I would not be surprised if Bitcoin hits 100,000 in the next 6 months. It tends to really get red hot, and then it just keeps moving. And we have this election next week on Tuesday. And last time we had an election, Bitcoin just took off because all the uncertainty, I think it causes investors to think, man, I've got, 99% of my assets tied to the US dollar, which is not a bad thing. The United States of America is strong. The US dollar is strong. But they begin to think, hey, maybe I could hedge a little bit and put some of my assets in an alternative asset class, and inflows go into Bitcoin. So we'll see if that happens again. It's certainly been having a good month. I'm glad that I own Bitcoin. I actually bought $500 of Bitcoin this morning, $500 of Ethereum, just to add to my crypto portfolio. And that's been a really good performing asset class in my portfolio. And we'll see where it goes. So Bitcoin's been moving. Let's see where the stock market is opening. It's been open for about 2 minutes, and let's see where it's at. So it looks like we are opening to a nice red day. It's Halloween. Stock market's trying to scare us with goblins and scary, scary numbers. NASDAQ is down 1.43%. S&P is down 0.9%. And we have had some big names like Meta reported and the market sold it off. Microsoft reported, market sold it off. Those are biggies. Those are really big. So those are certainly driving the sentiment and driving this sell-off. So we'll see how terrible it's going to be. Hopefully it opens up really low and then it rallies throughout the day. Yesterday, the market opened and it went really green, and then it faded into the red. So we'll see where it goes. So good morning, Android PC. Thanks for joining. All right. So the Russell, it's hanging in there, but the Russell takes a little time for it to update. So we'll give it a little time. I noticed that oil prices were going up today. So that will be one positive for a guy that owns an oil company in Chevron, and we have one oil company announcing today, which is Shell, and I'm going to cover that in a bit. So a couple of things around economic data. I think this was yesterday. GDP was reported. GDP was 2.8%. That is okay growth, and it was less than what was expected. And that's what causes me to think, okay, so it's less than expected, and inflation is lower than expected on a GDP price index. The PCE reported was a little high, and then the PCE reported today was right in line with what they expected. So this number would have me think, okay, the Fed's going to cut next month because they don't want this number to all of a sudden get below 2%. Then it'd be like, oh no, we're headed toward a recession for sure. So I think they want to soften that landing and probably cut interest rates next month. That's my expectation. We'll see what happens. We'll see what happens next week. For this week, the big news is all these earnings. And today, after the market closes, the big dogs, Apple and Amazon, will be reporting, and both will be super interesting. Apple, are they beginning to grow? Are they going to continue to hold steady at their current revenue amount and just keep cranking out all that free cash? We will see what they report, and we'll see how the market reacts. And then we have Amazon, and Amazon is a incredibly valuable company that does so many things well. That is so incredible that they have an e-commerce business that's just awesome. They do cloud services. They're the number one player in that space. They even do video streaming, and they do that very well. And that's one area that I'm focused on because they started to advertise on their video platform. And I believe they're going to really show that it's really profitable. They're going to show a lot of revenue in that area. And that's probably going to be a big positive for the earnings announcement, among other businesses that they're into as well. So we'll see what Amazon has to say after the market closes. But for now, we got companies that are already telling us what's going on, what happened in their earnings. So I'm going to go over as many of these companies as I can this morning and see what's going on, starting with MasterCard. So MasterCard, the market likes what they saw. And MasterCard is a really steady company, considering they're the number 2 credit card platform. Visa's number 1. MasterCard is number 2. And I would say it's the brand is very recognized. Visa is the most recognized, but MasterCard's doing quite well. It is a big, massive cap at $774 billion. The revenue isn't all that high compared to the market cap. And I think investors just really like, the name recognition of this company, the consistent performance. A lot of institutional investors are bought into MasterCard. So it really holds the stock nice and high. The PE is really high as well, 39 for the current year, and then 33 for the forward PE. The dividend is all not that impressive, right? 0.51%. It's just barely checking the box on a dividend. Analysts think it's fairly priced, and it's up 2% today. So, the investors liked what they had to say. And I looked at their earnings announcement, and in general, it's a quality business. They're growing net revenues by 13%. I mean, that's solid considering that they're a pretty big outfit, and they're very profitable because they develop a platform that's out there. They don't have to spend a whole lot maintaining that platform. And then really the financial institutions that want to use the MasterCard platform will then pay basically a fee. And generally it's 3%. I know that some partners will have a better negotiated rate. And really that's 3% that's up for grabs between MasterCard, the card issuer, and sometimes the retailer, because sometimes big retailers, like I'm sure Amazon says, hey, we have a lot of volume. If you want us to accept your card, you're going to take less than 3%. And I'm sure they do that and keep it all private. So it was a solid performance if you look at the top line. Now, when I look at MasterCard, I do see a very good quality business. It's been growing over the years. You can see their growth has been really good. Let's take a look at their more recent growth, just really steady. Very, very good. The one problem I have is that their cash flow isn't very good. I think I did the calculation earlier, and their free cash flow is $3 billion. I'm looking at the quarterly, so let me correct that and go to the annual. So free cash flow on an annual basis is 11.7. I'm going to round up to 12 just to make the math a little easier. And if I take 523 divided by 12, we are getting to about 45-ish, 45, 47-ish, and that's a lot. You have to multiply free cash flow times, 45. Looking at their growth, I don't see incredible growth. I mean, if I'm going to multiply cash flow times 40, I better be seeing 50%, 100% growth. And this type of growth is less than what I'm seeing for Meta, Microsoft, what I'm seeing for Google Alphabet. Yet they have PEs that are far better and they produce far better cash flow. So that's always been my apprehension in investing in in Visa and investing in MasterCard is their free cash flow just isn't great. And if you're going to have a market cap that's this high, you better show me better cash flow. That's just my investing recipe. There's probably other investors that like this stock for other reasons, but for me, I got to stay in my lane and determine, what is the recipe for my success. And it's usually, it has to have a very good free cash flow component for an established business. It's been around for a long time that should be producing a lot of free cash. So MasterCard's having a very good day. They don't produce enough cash flow for me to be a serious analyzer of the stock and consider buying the stock. Their earnings per share continue to go up nicely. It's going to go up nice. And the valuations probably that analysts are putting out there as a price target is probably based on earnings per share. And I can understand that. But I follow a little bit of the school of Charlie Munger, who really didn't believe in earnings per share. I do look at earnings per share and have that be an influence to my valuation, but the primary valuation is on cash flows. So, good news for MasterCard stockholders. The stock is fading a little bit, but it's still up 1% on a really red day on the stock market. Hopefully they hold this gain, and hopefully this stock will prosper for all its stockholders. Over the last 5 years, it's done 89% and it pays that tiny dividend. So it's really gotten the job done. I think that's good performance. And you can see that it's up and to the right. There were some opportunities to buy this stock, especially in 2022, along with a bunch of other stocks that sold off. But after that, it's kind of been going up. And I think a little too expensive for what I'm getting. So that is MasterCard. And good luck to all owners of MasterCard. So it looks like Shadow Guy. OHI doing well, beat earnings. They are US and UK. Yeah, cool. Yeah, we looked at OHI briefly. We can look at it again. So this is a real estate investment trust, and they are providing properties for the healthcare industry, primarily in skilled nursing and assisted living facilities. And there's the population here in the U.S. of people that have gotten to retirement age and then beyond retirement age is really high. That's a pretty big population, the baby boomers. And they, in some cases, need to live somewhere where they need nurses to attend to them and potentially a doctor to come and do house calls at the facility. So this is a good model, I believe, for the marketplace. And this stock's really working today, 4% on a really red day. That is a very good stock. Very good day to own this stock. So congratulations there, Shadow Guy, and hopefully it continues to flourish and really be a winner. It's good to have diversification for this reason. If you have a super red day, right? And I don't know if it's a super red day still. Yeah, it's still super red. When you have a super red day, and you have a couple of stocks that are, call them oddball, call them a company that's going to be, you know, uh, singing to its own tune and being a hedge on the rest of the market, it's a pretty good idea. That diversification kind of saves the day and keeps you from having super high losses on a red day like this. If you were strictly in tech today, as an example, you might be really taking all the losses that are potentially out there. So diversification, it's a very good approach to making your portfolio perform the way you'd like. With diversification, you may give up some of the upside when the market's really booming, but you have kind of a safety net so that on really bad days, your portfolio doesn't go down as much. It's good to have some safer stocks. And I consider REITs, especially pegged to healthcare, to be on the safer side. And it's looking great today. If you consider over the past year, this one's done 33.5% plus add the dividends. So you're up to, pretty much around 40% rate of return. That's phenomenal. That's great. So go OHI. Let's talk about Merck. Merck is down. Man, these guys have not had a great couple of years. They are up 23% over 5 years, which is not very good. A couple of pharmaceutical companies that have historically just been really, really good companies with great names, Merck, Pfizer, they've had some tough times. And I think they've had to rethink their businesses and really get back to their core competencies, what they're good at, and be good at it. In this case here today, the earnings are not good. The stock is down 3.12%. And let's see if we can get a handle of what's happening, what's causing the market to not like what they're seeing. So let's see if this is going to give me some information. It is not. So second thing I want to look at is see if, nope, stock analysis is not looked at this stock yet. So I'm going to go to their investor page. So let's go to Merck, investor relations. And then we'll go here from the horse's mouth. Let's see what the company had to report. And here it is. All right. So sorry, it's a little small. Make sure to read all the important stuff. Total worldwide sales increased by 4%. Okay. That's not sensational, but it's growth. That's good news. This is a fairly big company. I mean, they did 16.7 billion of revenue in the quarter. So it's a pretty big outfit. So that looks okay. So they guided, okay, that's good. All right, so here we've got third quarter, and they grew by 4%, and looks like they did lose some money. So maybe that's what's weighing on investors. Wait, no, they didn't lose money, sorry. Net income dropped by 33%, but they still made money. So that's good. So they made money, but just less of it. And investors might be thinking to themselves, what's going on, Merck? Got to make some more money. All right. So Merck in general is a strong company. I mean, they have some drugs that are still under patent and they can still, patients still need them and they need to buy these pharmaceuticals in order to get their health back or maybe sustain their health in some cases. So Let's take a look and see if they provided any more financial statements. They've got their earnings per share, which we understand. I'm hoping they have a statement of cash flows. Lots of schedules, just slicing out like different views of the business, especially around these drugs. And it looks like their biggest drug, they're in the oncology business. Biggest drug there is Keytruda. So these drugs here, and that one, let's see, 7.4 billion. It rose nicely compared to last year, so that looks good. You can really dive into all the different drugs that they have on that schedule. So it looks like I struck out on getting a statement of cash flows, but what I'll do is I'll look at the historic to kind of form an opinion. I'm not a stockholder of Merck. I believe I own one of their bonds because it is a good quality company, in my opinion, and it's worth investing in bonds for me. And when I look at so they're growing at 4%. That's decent. And we will look at free cash flow, see how that's been doing. So free cash flow has been solid for years. Really good solid free cash flow, and it's up to 13.1 billion. So 13.1 billion. Yeah, I mean this stock, if it begins to grow, that market cap's going to go up because if you look at the company, I think right now it's fairly priced, but it could go up substantially if they start to grow. 4% isn't bad for their size company, right? 62 billion. But if they can just catch a little excitement on that top line, I think this stock can begin to move. So Merck, one of the, historically successful pharmaceutical companies, hopefully they begin to grow and start rewarding its shareholders. So that was Merck. It's opening down, or excuse me, it opened and it's trading down 4%. Looks like Shadow Guy's got a couple comments. So you had a buy order at a really low price on eBay and it dropped. I didn't notice that. I think eBay is kind of a small cap now. They're 27 billion. Wow, man, they dropped a lot. I don't like eBay's business. I think it's very it's people are selling one-offs on there, and that has a certain limit to its scalability, where Amazon's like, hey, you can have an e-tailer on there sell 1 million units of one product. Well, that can really scale. Where eBay, it's like, hey, I've got one of a kind thing and I'm going to sell it. There's a bidding process. Maybe the transaction takes 30 days or longer to go from the person or company listed it on eBay and then it finally sold. Well, that doesn't really generate a lot of revenue very fast. It takes 30, 45 days for it to go from start to finish. So, uh, you know, it's not a business that I really like, and I don't think they've grown really well over the past years. That's been my main apprehension is you have low years of sales decreasing. I think when everybody's cooped up and during COVID, it went up and then it went down in 22, slow growth in 23, slow growth trailing 12 months. So I'd rather buy into Amazon, which I'm a shareholder. That's my investing lane. eBay could start to work, but that's just my observation of it. So Hood, Hood's been Hood's been a really good stock for me. So let's see what's going on today. Holy smokes, what happened today? Holy smokes, Batman. And is there any news that's driving this negative 13.74? Man, that's a big drop. So I own quite a bit of Robinhood. So The market on Halloween is really spooking me. So let's go to the hood. Now, the reason I like Robinhood is I believe that they are not trying to be another brokerage. They're not trying to be like everybody else. They are carving out their own space. They're like, you know what? We're going to do it our way. We're not going to replicate things that have been done before. We actually want to understand what the younger investor really likes, and we're going to go. We're going to go in our own direction. So I'm looking at the earnings report for Robinhood, and let's see what they reported. There's been so many earnings, I have not been able to keep up. And this one is an important stock to me. And I appreciate you bringing it up because now I'm like, hey, when I see this really red number, I'm going to know why. So, second highest revenues on record at 30%, 36% year over year, I guess, growth to 637 million. Okay. So 36% is good. Transaction-based revenues increased by 72%. Net interest revenues increased by 9%. Other revenues, 42%. Okay. And I'm going to kind of read some of this and kind of scan it. I want to pick out what I think is useful to consider, and then I'll show you my valuation of Robinhood. So the cash, it continues to be just a good cash company. It has nice cash on the balance sheet and probably not a whole lot of long-term debt, if any. No long-term debt. Very good. All cash. All right. So when we look at their operations, they total revenues in the quarter of 637. Sequentially, what investors might be having a little heartburn over is sequentially they did go down 7%. So if you compare them to the previous quarter of 2024, they went down 7%. They compare them to the 2023 number, they went up 36%. So a little bit of good news, a little bit of bad news there. Year to date, they're showing for the first 9 months, 39% growth on the top line. So their business is working, it's growing. Cash flows, okay. So cash flows for the first 9 months is 1.2 billion from operations. They don't have to put a whole lot into the business. The CapEx number is $9 million. So it's 1.2 billion of free cash flow. So it's free cash flow is going to be 1, 2, 3, 4, $1.234 billion year to date. So looking at so they're growing well. I've updated my Uber analysis. I'll show that to you when we get to Uber. Right now, I'm trying to figure out Hood. And so here's Robinhood. And I thought that they were overpriced because the stock has been moving up so darn fast that they got way ahead of where I thought they were going to land with regards to their valuation. Now, we just calculated that their free cash flow was at $1.2 billion. So I'm going to update my estimate to, I'm going to say 1.3 for the year, which is a conservative number. You think they're going to do a little bit of free cash in the fourth quarter just to get the juices flowing. And the stock, and I'm not sure if my my market cap is up to date. So let me grab that real quick. Give me a second on another screen here. So their current market cap is 21,410. Okay, cool. And then shares outstanding 883. So that they have bought back some shares. That is good news. All right. So comparing their value based on free cash flows, it's still a really good company. And the one thing, let me update my earnings per share figure and see what if analysts have changed their tune. Now I'm going to use the earnings per share for 2025, which is expected to be 70 cents. I'm going to use a PE of 25, growth rate of 2%. And actually, I'm going to increase that to 5%. So overall, I think that now Robinhood, based on their better free cash flow number that I just saw, is really a good buy for me. Now, here's where I stand on reports like this. What's important to me is to think about the business that Robinhood is in and think, where do I project this business is going to be in 5 years? Are they going to be stronger, better, faster? Do they have competitive advantages? And my answer to that is yes. They're mostly in the green, meaning Robinhood's building a company that really serves the younger investor that grew up with some type of digital device in their hands, whether it be a smartphone, a computer, tablets. It's a very interactive world. And my two sons, I've got 20, 24-year-old sons, they had technology in hand at the age of 2. As soon as they could operate it, boy, they were off to the races. And let me tell you, you see a 2-year-old on a computer and you're like, okay, the software is really intuitive. And these kids and these young people, I should say, um, have really grown up with an expectation of platforms to do certain things. Robinhood is built for probably the investor, and I'm going to guesstimate, and I'm probably wrong, but conceptually right. The investors that are less than 35 years old, because they have a digital mindset where I'm 56. I'm more of a tabular spreadsheet kind of guy. So I have a brokerage account that kind of handles information the way I want to see it. Well, the next generation wants to see it the way Robinhood wants to do it. They want to go into investments that Robinhood is putting on their platform. And evidence of that is that the other brokerages are following what Robinhood does. They sell crypto. Well, guess what? Other brokerages have had to adapt. They sell crypto. They really get into the gamification of investing and trading. And, that just works. They have a membership program where if you pay into that subscription, you get certain benefits. That's a pretty good idea. So all these things, I believe, carve out a new space for Robinhood. So I think their future is bright. And they also are very agile. They can adjust to what the market wants far better than the traditional brokerages that are really stuck in their ways. They don't want to cannibalize their current businesses. They want to keep selling the stuff that is really profitable to them. And that in itself is a liability, because if a new player comes into town and starts doing it in a way that everybody else likes, they're going to take your business. And Robinhood's been certainly doing that. So from a business perspective, I am very optimistic of Robinhood. And since I'm seeing just very good value in the stock, I will be a buyer of Robinhood. And it's a $21 billion valuation. That's not a whole lot. When we look at their growth, they've been growing nicely. In 22, when stocks are really selling off and it was a bear market, not a lot of enthusiasm, you didn't see their revenues do very much. But if you're going to grow in the mid 30s, I'm a buyer. If you have the right strategy, I'm a buyer. So I'm sitting on a really nice gain of Robinhood. I was holding because I thought, okay, let me just wait and see what happens. And sometimes bad news is good news. Bad news that, the market didn't like aspects of their report, lessens the stock price. I saw stuff in the report that improves the value of Robinhood. So not intending to be a contrarian, but I'm buying Robinhood stock. So that's where I'm at with Robinhood. So Mike, that's for you. I don't know if you're in Robinhood, but I appreciate you bringing it up. So it looks like dividend investor guy, you got eBay at 52. I think you made a few bucks already, right? So, all right, maybe you ought to become a day trader. There you go, man. You could have made $6 a share. That would have been great. That is great. You did it. So, so you just bought some Mike. Sorry. Yeah, I would say let's look at the Robinhood chart. It's a pretty chart. I'm sure today is going to make it look less pretty, but it's up 169% in 1 year. So a bad day in a great year. So I'm good with, you know, it pulling back, but it gave me data, right? Earnings give us more data. And I try to form the recipe for my success and try to make it repeatable, try to learn from each situation. And sometimes the market's based on other metrics potentially. Robinhood is not a huge institutional investment like we saw with MasterCard. It's more of a new generation financial services company. And you better look out because these companies are going to disrupt the old companies. Robinhood is certainly that company with that attitude. I like how they operate their business, and they've had really, really good run ups. So I am good with a little pullback and buying some more shares today. I'm going to let the market calm down a little bit. Boy, it is really selling off. Nasdaq's down almost 2%, and then S&P's down over 1.12%, and the Dow is kind of keeping it together. The Russell, maybe we haven't given it enough time, but the Russell's kind of holding its gains. Good job, Russell. All right, so that's Robinhood. Thanks for bringing it up. We'll see where it ends up, but I think for me, I'm going to add more shares. So, all right, good stuff, guys. So that was Robinhood. All right, cool. Okay, so let me keep going on track here. We got another 23 minutes to go. One more comment on Robinhood. I am a fan of SoFi, Mike. Just the numbers, I have to have my recipe. And the numbers that I don't like around SoFi are their profitability. And I don't know that they're expanding their book value. Just when I value SoFi and I recognize that they're a growth company, I recognize that they have ideas that are going to transform the banking industry and the lending business. I'm just, for my process, it doesn't create the kind of value I'm looking for. And it could be me. SoFi, for all I know, is going to be a super high winner over the next 5 years. I hope it is for you. And I'll just have to stick to my process and, hopefully find 7 or 8 of the stocks that I pick are winners and a couple losers. I'm going to lose money on a couple because I can't get them all right. But I got to stick to my process. And just SoFi, for every time I look at it, I'm a fan of SoFi. I go to SoFi Stadium here in Los Angeles. I like what they're doing conceptually. I think it's a good idea, but I think they're going into a market that's not as prosperous as the markets that Robinhood's going into and others. So we'll see how it goes. Good luck with SoFi. All right, so we talked a little eBay. Now here's a company I've never heard of, Linde. And this is Linde operates an industrial gas company in the Americas, Europe, Middle East, Africa. So I wonder how these guys have done. 23%, that's pretty good. So this is an energy company. Specialty chemicals in materials. Okay. So maybe these are gases that go into like manufacturing and so forth. Now they have had negative revenue, but the stock has done well. Up 20%, little dividend. So not bad. And the stock is selling off today. So it's interesting. Let's take a look at the free cash flow and see if something that I want to put on my list of stocks that I want to look at and see if it's worth really tracking. So really good cash flow. It has kind of settled down a bit, but in 21 it was really good. 22 was good. So let's say it's 5 billion in free cash flow. They're not growing right now. So yeah, this one seems a little expensive. You'd be paying like 40 times free cash flow. It's not growing. It's in I bet you the gross profit is about 50%. So yeah, this one's not worth for me, not worth tracking and doing analysis on. But the stock is selling off along with a bunch of other stocks today. All right, Shell. All right, oil companies are up because oil prices are up. Shell is a big oil company out of the Netherlands, and they're a big revenue company, 302 billion, pretty substantial market cap at 201 billion. Look at these PEs for oil companies, really low, and that's because they're really, as oil prices move, so do the stock prices for these companies. Now, the integrated companies, these big companies, Shell, Exxon, Chevron, Mobil's part of Exxon, BP, British Petroleum, even Total, they tend to weather these fluctuations in oil prices better because if they have a lower oil price, when they sell it at the gasoline station on the retail side, they get to make some margin. So they weather these downturns a little better than the independent oil companies like an Occidental or independent companies that are just doing the exploration side of oil. So this one's doing pretty good today. On a day like today when it's super red, that's not a bad stock. Let's look at what the headlines. So it's saying the British major. This is a British company. I always thought it was a Dutch company, but I guess I'm wrong. So it looks like it shrugged off, the lower oil prices. And today, oil prices did rise, but I think it was on Monday they dropped substantially. They dropped like 5% in one day, and that's a pretty good drop. And they got into the high 60s. Right now, it's probably around $70 per share, per barrel, and that's it. That's good news for the oil companies. Better news would be oil prices get to $80 per barrel, but the economy doesn't like that, but oil companies do. So good day for Shell. It's looking good. And right now they're not paying a dividend. Okay, oil companies typically pay a really nice dividend. So I'm interested to see what ExxonMobil is doing today. Up 1%. They pay a nice dividend. So looks good. Exxon, from the big oil companies, this one's probably been the best stock for the last year. I own Chevron, so I have to recognize that this one's done better than Chevron. It's up 11.55%. You add that dividend, you're up to, let's call it 14 to 15% rate of return with oil prices that have really come down. So that's not bad. That's not bad, Exxon. Good job. So Shadow Guy. So Shell moved from the Netherlands to the UK 2 years ago. Interesting. Well, I guess I didn't get the memo on that. But historically, Shell has been the Dutch company because I believe their name at one point was Dutch Royal Shell. I believe was kind of like their branding. But maybe they moved to the UK for some reasons, and so that's that. All right, so the oil companies are doing okay today. That's good because I'm going to have a lot of red stocks today. It's going to be pretty bad. When I get done streaming, I'm going to look at my portfolio, and I'm going to get some tissue before I open the portfolio because I may shed some tears. We'll see. We'll see. I'll have to hold it together. All right, Uber. Uber is one of my stocks. And yeah, I better get a lot of tissue because it's down 9%. And this is a pretty good. So I own a lot of Robinhood. I own a lot of Uber. So, man, it's not going to be pretty. It is not going to be a pretty sight. Although, you know, I don't think I need to be all that disappointed when the stock's done 75% over the last year. I'm okay with a down day. In fact, I updated my analysis. When we look at the Uber announcement, sometimes I just don't quite understand what the market was expecting out of these earnings reports because in the case of Uber, they are growing. And I think some of the headlines that I saw were, well, they didn't grow their bookings, like how many rides were hailed enough. Okay. But they increased their prices. So they were able to fewer rides, but higher prices. Okay. And overall, they did have revenue growth of 16%. So that was good. And their free cash flow was better than I had expected. So again, there we have another example of, well, their cash flow, which is my number one metric, was far better on Uber. But the expectations of the market of, hey, they didn't grow enough, they didn't grow their rides enough. That is what's kept the stock down. All right. Well, I updated my analysis. I did it before our stream this morning. And I think the stock's discounted. Now, I was holding on Uber for this earnings. And again, this is a combination bad news on the stock price that the market perception is working with is good news for me. I'm going to buy more shares of Uber. So Uber, Hood will be buys on my portfolio today. I ran through the numbers. I annualized their year-to-date number for the first 9 months. They're just cranking out the cash. And keep in mind, if you're growing at 16% and potentially higher because these guys are expanding globally, their food delivery is doing well. They're going to do robo-taxi with Google Alphabet's Waymo robo-taxi technology. There's some exciting things out there for Uber. The robo-taxi story and that expected business of the future. Uber's sitting in a good place because they have the network. They have the people that ride on Uber, that trust Uber, me included. I take Uber when I travel. I don't rent cars anymore. And it's a really good service. And overall, I think today's report is bad news generally. Stock is down. It's not fun to see your stock price go down substantially, but good news that I get to buy into Uber at a lower price because I intend on owning Uber for a long time. So Uber is classified as an industrial, believe it or not. And my current position is worth $75,000 after that haircut I took today. So I'm still good. No big deal. And I'll buy some more shares. I could see myself buying up to 100 grand. And that's what'll be my next move on Uber. Let's go update Hood and Robinhood. Robinhood, I own 36,800, and that was after the haircut today. And I'm still sitting on a 93% gain. So I'm good. I'm good that. So I'm going to buy to 50K and keep buying into those awesome companies. I'm also buying into Ally, which was really sold off. And so far, so good. It's up 2%. But I think this is just, these guys have so much value. It's like, okay, stock market, you want to misunderstand a stock again, because I've caught a lot of stocks that were misunderstood. I would gladly buy it at a discount. Comcast announced today, and let me catch up. A lot of comments today. Thanks so much. It's good to see all of you. Sergio, good to see you. Michael Anthony, appreciate you joining. So HLF, and I don't have enough time today to cover more stocks. I apologize, but I've got like 10 minutes and I've got like 30 minutes of content left. So I'm going to get through that as fast as I can. So, why is the market down is another one of your questions. I don't know. And many days I don't try to figure out too much because, when we look at a market that has been cranking up for the last 2 years, if you have a little bit of a sell off, you're like, oh, yeah, no big deal. It's like there's no general big story or big problem. Like, oh, no, stocks are selling off because the economy is crumbling and, you know, banks are repossessing homes at a very high rate. Just really bad problems. No, none of that exists. We've been on a super high, appreciation curve for 2 years. My portfolio is doing awesome. We have a pullback day, no big deal. We have an election coming up next week. It's a big one. And a lot of people are voting. I already voted. We'll see who wins, and then we'll get behind the winner here in the United States and proceed forward. I've made money with Democratic presidents, Republican presidents. I make money. My job is to make money, and we'll see who wins the election, and we'll proceed. But the election itself is driving a lot of fear, anxiety, uncertainty, and I think once we get that behind us, maybe we'll see a market respond, and we'll see a Santa Claus rally toward the end of the year. But I would not be surprised if we start, going down substantially. I'm sure some of the regular viewers are probably thinking to themselves that I've been saying that, man, I'm expecting September is going to be a negative month. We're going to lose some value there because we've just been too much on a very up and to the right curve. We got to give up some of these gains. Some of these prices are getting really expensive. We looked at the PEs on MasterCard. Man, that's a high PE. So September came and went, and I made a lot of money in September. I'm like, oh, well, if I'm going to be wrong, I'd like to be wrong more often and see my portfolio go up like it did. And the month of October, again, I didn't want to say it too loud because I said that September is going to be bad. And I'm like, in my core, I was like, October is going to be bad. And at this point, yeah, I'm going to be in the red for October. But yesterday evening, before the market opened today, I was up, at a nice gain. Not anything like September. It hasn't been the best month for the last 12 months. But I'm sure today I lost a substantial amount. We're probably going to be ending the month in the red. But still, for the trailing 12 months, I'm doing great. For year to date, I'm doing great. So I'm not quite sure why the market's selling off, but is this the beginning of maybe a little bit of a correction? Maybe. Let's see what we have to deal with. All right, Shadow Guy, you've been good about giving me updates. I guess I got to look at United Therapeutics and then Qualcomm. Holy smokes. Man, I got to get up earlier. Keep up with these things. United Therapeutics up a little bit. All right, good. I love United Therapeutics. I'm really excited about what they're doing. And hopefully it works because they're going to help a lot of people. And it is a small cap. And I keep putting capital into United Therapeutics. And let me take a peek at Qualcomm. It is the one semiconductor stock that I am buying into. I think they're doing well. It's down 1.8%. And over the last year, it's up 51%. But you see this kind of sideways. I started buying when it, kind of came down so fast because I look at the fundamentals of Qualcomm. They look really good. They're growing, profitable. They're in a lot of the Android mobile devices, and those are selling really well. There's Snapdragon. I don't know if you've seen advertisements. I forgot which, was it Microsoft came out with their AI PCs? Well, they're on the Snapdragon chip that's made from Qualcomm. So I really like a lot of setups for Qualcomm for the next couple of years. So I'm buying into Qualcomm. I've owned Qualcomm in the past, made money, sold it. There's nothing against making money on the same stock. In fact, I owned and then sold, and then it did this. So I'm like, hey, I like the company. Thank you for the discount. I will buy, build a position, and hopefully it works again. And they pay a nice dividend. Not the biggest dividend in the world, but it's a 2% dividend. So let's see where it ends up. All right. So back on task. I wanted to make sure I covered Cigna. So let me go there. Cigna's having a phenomenal day. Phenomenal. And up. Oh man, I thought it was up like 10%. What happened? I guess I talked too much. It was up like 10%. Now it's only up 2.69%. And of course, I'm sure you guys do this. You like think to yourself, I had to buy this one stock. I think it's going to set up well. I think after the earnings, this thing's going to really pop. This week, this stock was that stock because I'm selling out of my Elevance position to harvest some losses. I've lost money on Elevance. And I've got the Cigna stock on my watch list. And this is a stock that I'm like, I need to buy this stock as I exit my Elevance position. I'm like, should I at least buy $1,000, maybe $10,000 of Cigna? And I'm thinking, I actually thought that yesterday and the day before, and I didn't pull the trigger. And it's certainly doing well. I like what they had to announce. And I think I am going to switch horses from Elevance to Cigna because I'm sitting on very good gains this year that are going to be taxable. And I think Elevance is a terrific company, but I'm sitting on a loss, $8,000. So I'm going to sell that stock, take that loss, harvest it, and at the same time buy into Cigna. I had been buying into CVS, which I think is super discounted. So I'm going to buy into CVS and Cigna while I get out of Elevance. And then I hold my exposure to healthcare, which I think is going to do well in 2025. So I'm sure you guys have dealt with a stock like that where you're like, I should buy it. And then it goes up. And of course you're like, oh no, I didn't act. And that's that. So Cigna's having a good day. I believe they topped their quarterly profit estimates. They're doing well, which is a good report, man. The healthcare, the health insurance payers have just been getting shellacked. United Healthcare, Elevance got smoked. They just got hammered. And Cigna is kind of coming in with a good report. Go Cigna. And they're smaller than Elevance. They're smaller than United Healthcare. United Healthcare is massive. And I kind of tend to think that sometimes the middle-sized companies that are a little more agile can probably outperform the big guys because they can adjust to market conditions. And we'll see. Good job, Cigna. Congratulations to Cigna stockholders. All right, we got 3 minutes. Let me check on the stock market, see what is going on with the stock market. So we're down almost 2% on the NASDAQ. We're down S&P 1.26. Coinbase is down 7.5. Roblox. Oh man, I love this company for what they do, but their fundamentals have always been like terrible. Not always. For a while they were okay, and then they got really terrible. Looks like they're having a really nice day of 20%. Go Roblox. So, let me take a peek at one stock list I like to look at, and that's the Chinese stocks. Heard a little bit of good news in China. What's going on today? Well, considering that the American stock market's melting down quite a bit, this isn't too bad, but it's not green. It would have been nice to see a little bit more green. There's one green number on here, which barely qualifies for being green. But that is the market for you. It may not give you everything you want on every single day. And that's the case here. All right, everybody. So I am going to land the plane. Great live stream. Thanks for tuning in. I appreciate it. And I'm sorry that I didn't get to all the stocks that were nominated. I didn't get to all the stocks that I wanted to cover. So I just ran out of time, which is the case just about every morning during these earnings calls or the earnings season when we have so much to cover. But I appreciate you guys bringing up stocks that I hadn't reported. And I'm going to live stream later today. I'm going to try to catch the two big earnings reports and, kind of go over Apple in depth and go over Amazon in depth. I'm an Amazon stockholder. I am shorting Apple. I know that might seem like a crazy move, but at this point, I'm doing okay with the position. I just think that Apple um, is it's all brand, and the fundamentals tell me this business is gonna sell off. They're worth maybe half of what their market cap is, and I could be wrong or I could be right. And I've started a short position on Apple. I've had it for a couple months, and I will analyze Apple. I'll analyze Amazon as well as the other stocks that are going to announce. I would love to have you as a paid member of my community. I try to deliver really good sessions on weekends that are just for members, where we can all advance our skill set as long-term investors, go over topics as well as stocks, and really just try to get better. I'm a learner that, yeah, I read books and I study the great investors, the super investors, but I also learn by collaborating with other investors. And I think that's probably the funnest part. What I'm trying to do is build a community where we do collaborate with one another. It's never financial advice. You never get direct buy, hold, or sell recommendations on stocks, but you do get to tap into the collective experience of a lot of investors. And that, I think, would make any investor better. If you can see how other investors are succeeding and failing, you can really learn from their success and failure, mostly success. So consider being a paid member. It'd be great to have you, and I would appreciate your consideration of that. You can find more details on the description of the live stream. So everybody have a terrific Thursday. Enjoy your Halloween. If you can make it to my live stream this evening, terrific. If not, have a great time celebrating Halloween. And if you're handing out candy, be generous. I like seeing smiling faces from little kids. So I try to give them a big handful of candy and watch their little faces light up. It's really worth the couple bucks that I have to spend on candy to give them enough candy. But anyway, everybody have a terrific Thursday. Thank you for tuning in. I will talk to you soon.